Good afternoon and welcome back to our next MoneyWise Wednesday session. Today we're bringing to you predatory lending and the faces of the new borrower. I'm Herschel Holloway. I'll be leading this session. I've got two of my counterparts with me, Ms. Kelly Walter and Kelly Merck, both specialists in this area as well. We're here to deliver some very good information. So without further delay, let's dive right in and see what we can bring to you today. So Kelly, I think you've got some information about how our viewers, our members alike can be into this awesome drawing that we offer every week. So can you share some of that context?
That's right. So if you've been following us over the this is our 6th week now, then you know that we're giving away Visa gift cards right here from Envision. And so we have had 2 winners every single week since we first launched MoneyWise Wednesday. So we want to encourage you guys to like and share. The goal is to get as many people aware of our MoneyWise Wednesday topics to help them be financially sound, especially right now. With all the things that we're going through. So special shout out to last week's winners. They are Abrilla Couch and Laura Castile. So yay to them. We're going to be sending their cards on the way to them shortly. And then for those of you who are completing our MoneyWise playlists, we do a drawing every single month of $100 Visa gift card winner. So guys, I can think of what I can do with 25 bucks right now. I can support local, maybe by going to a local shop, right, and purchase dinner or something that I need. But $100, imagine what you could do with $100. Like, how cool would that be? So I cannot wait. We're nearing the end of April. So by the time this recording actually is aired, we will be near the very end of April, so we'll be really, really close to getting a winner. So make sure you go on to our MoneyWise website, complete a playlist, and you're going to be entered to win. You're entered for every playlist you complete. So you can increase your chances of winning. So go to envisioncu.com/moneywise to get those playlists completed, and then like and share this post right now.
Perfect. Thank you, Kelly. I appreciate that. So guys, please like, share, comment, share photos, whatever it takes to get everybody engaged. We want to bring this information to the forefront. So we've got a pretty cool topic today, Kelly. Pretty cool.
Yeah, it's so good. We had fun, with our kids that we did this morning. I think for adults, it's even more relevant. So I'm really excited for you to bring this to us today.
Good deal. So this is the topic that we're discussing. Why the three of us, when we sat down to collaborate on what topics to bring, why did we suggest this topic to be presented to our viewers today? Can you share a little bit about that?
Yeah, I think, in years past, the understanding of lending for most was you get what you can from whoever is willing to give it to you. Payday lenders, title loan, and finance companies, they've really preyed on communities where understanding of lending and borrowing is really just non-existent. It's really missing from that person's experience. And so, it's very profound how many people in our region of the country especially are intentionally being preyed on. Today, we wanted to really be specific with this topic because we want to share with you how you as a borrower that going to a payday lender or finance company is still borrowing, right? And so we want to show you how we can really kind of change, maybe hopefully shift you out of a cycle to really help you protect yourself and give you more credit worthiness in the future and get you out of a cycle that's costing you a lot more money than you realize through a conventional borrowing. But I think one thing that's really important that we know is that typically these people are preying, or these companies are preying on what is considered traditionally maybe poor, uneducated, unbanked people. And so, however, on the flip side of that, we have a lot of people who are educated, who make good income that also fall victim to this stuff. So we realize that this really is an appropriate topic for all of us, like many of us, because predatory lending comes in all different shapes and sizes.
Thank you, Kelly. I appreciate that. Kelly, before we dive into the material, the content, anything you want to share before we get into sharing this information with our viewers and our members?
Yeah, we really look forward to you explaining the difference between subprime and predatory lending versus traditional lending. And I'm sure viewers are interested, especially right now in today's world with the coronavirus and everything, and people are in are in a little bit desperate situations, and the person that wouldn't normally find themselves in this situation may look at this and think that it's the best thing, the quickest, best way to get out of their situation. So I know that this is really good information for us to talk about today, and I look forward to you sharing it.
Outstanding. Thank you. I look forward to sharing it myself. So without further delay, let's jump into this content. Let's bring some information to our viewers, our members alike. Defining lenders, right? So traditional lenders, examples of credit unions, banks, and lending regulated institutions. What that means is there is a cap that's specifically designed to prevent these lenders from exceeding any type of interest. Remember, interest means what you're paying, interest maximums that have been set forth by the state. Non-traditional lenders, such as payday lenders, title loan places, they're not subject to the same rules that we are, guys. They're not subject to the same rules as the banks and the credit unions and the premier lending institutions. And we're going to define what some of those look like. Examples of lenders, reputable and traditional. Envision Credit Union being one, right? Other credit unions and a number of banks are also reputable. But you've got to decide whether or not your banking institution is on that reputable list or they're not so reputable. Predatory lenders are subprime lenders. These are third-party lenders. These are lenders that typically go after or seek any type of consumer interest from those that may not be in the fortunate field of having higher credit scores, or they may be in a financial hardship that they feel as though they can't turn anywhere other than places that don't judge, have discrete and very, very different hours of traditional lenders. If you look at the credit union, for instance, our normal business hours of operating from 9 until 5. You try driving down the road on a Friday or Saturday or a Sunday, you're going to see these yellow, green, and neon lights outside these finance companies. They're baiting you to come in. These are the times that they know that traffic is low, but your interest to them is high. Some of those examples include Mariner Finance, Nicholas Finance, One Main Financial, First Franklin, the list goes on and on. See if your institution made this list. And if so, I challenge you, reach out to us and let us help you navigate this exit strategy without further delay. You ask yourself, what is different about my specific area than some of the other areas that I see some of these lending places, right? You want to know more? So let's tell you more. The data that we're providing you today is collected in collaboration of throughout the city of Tallahassee. This is primarily just an example alone, but that doesn't mean that these numbers are from your area. There are 17 predatory lending or payday lenders in Tallahassee alone in 14 square miles. I'll say that again, 17 predatory lender or payday lenders within the city alone, within 14 square miles. There's 16 title loan companies, 11 finance companies, and then you ask yourself, why all the banks, why all the credit unions, and why all these predatory or payday lending companies? Well, when was the last time you walked into a premier lending institution and you were declined based on your request? You start losing all hope, right? And then you start looking for alternative measures. That's why they're here. You ask yourself, who owns these places? If I can't get approved in a bank or a credit union, who owns the places that are willing to give me money? Don't fool yourself. It's the big commercial banks that won't bank with you. Those are the ones that own it, right? You ask, what ranges of rates am I looking at if I decide not to choose Envision or reputable? You're subject to up to 800% worth of interest rate. Remember, I said this 1,000 times. The higher the risk, the higher the rate, the higher they make. That's why it's very important for you to understand singly alone, while within 2012 and 2018, payday and predatory lenders reported $13.2 billion in revenue alone. I'm going to take a quick break right there because I want that to resonate. $13.2 billion alone. Ask yourself, have you ever saw one of these lenders from one of these payday lending places in your school, in your community, advocating for change? Want to do something different to help you educate yourself by preventing that cycle from continuously recurring? You haven't. Now ask yourself when the last time you saw one of your Envision, one of your credit union lenders or from your banking institutions show up at your community, wanting to advocate for change. Red flag to me, red flag should be for you as well. So
Herschel, can I ask you a quick question?
Please.
So can I ask if all of these predatory or payday lenders are in fact owned by commercial banks, or maybe some of them? Because I'm
So
I'm just curious.
Yeah, great question. Thank you for asking. Not all predatory or payday lending companies are owned by commercial banks, right? They're private investors, that's private companies, and there's companies from overseas that invest into the need of Americans because we're not stable enough to understand that managing an effective budget, monitoring our credit can help us advance our financial picture for years to come. So yeah, great question. Are they all owned by commercial banks? Not all of them. Just like you would look at hotels, for instance, Kelly. You've got the Ritz-Carlton, you've got the W, you've got these amazing hotels, right? But everybody can't get into those doors. So what do? They offer a different chain of hotels for you to be able to afford so that they can still obtain the funds that you're looking to pay off into the consumer world. Does that make sense, Kelly?
Yeah, definitely. Thanks for clearing that up.
Absolutely. Why are you telling me this, Herschel? I know you're asking yourself. Well, we're telling you this because we want to protect you, right? This information isn't hidden information. It's not information that we're not wanting to share or nobody's wanting to share. It's just that a lot of people don't often go looking for it. So we're going to bring it to you. Subprime, what does it mean? They're considered bottom feeders in the financial world. They prey on the weak and the vulnerable, much like a catfish. They're at the bottom of the lending pool. I know it's a weird name, but associate the lending style that they offer as being bottom feeders. They prey on those that are vulnerable. Right? Being a non-traditional lender means they impact your credit score in a negative way, guys. Read this again. I left it on the screen specifically for you to read it again in a negative way. Refer to last week's MoneyWise topic, understanding credit and credit score. Things that negatively impact your score, finance companies looking at print. It's there for you. That's why we shared it. The old face of the payday borrower, like Kelly led into the session beginning, right? So historically, what we saw in the past is that specific borrower being identified or perceived as being poor, right? Uneducated, underserved. They're within a minority community. They have no other way to turn, right? They're perceived as being ignorant or misguided. They didn't have these conversations in their households as some of our more powerful borrowers have had, right? They show signs of desperation. I'm assuming that you're saying that's not you, right? Well, look at the way the world is changing day by day, the uncertainty of the times that we're experiencing now. I'd like for my team to share with you the new face of the borrower. Comfortable, prideful, affluent, educated, rational, discreet, and intentional, right? These are all the faces of what the new borrower will look like. It doesn't often look like what we thought in the past. The borrower today looks like me and you guys. Looks like me and you. So we're asking ourselves now, how do we prevent from becoming prey to those that prey on those, right? Avoiding the cycle. Short-term discomfort leads to long-term stability, right? Read that again. Short-term discomfort leads to long-term stability. Make those goals, stick to them, and hold yourself accountable. Get uncomfortable to get comfortable. It's okay, right? Right? Change is uncomfortable, so get there. Build a realistic budget and hold yourself accountable. You hold yourself accountable. Reduce your expenses and review your quality of life. Is it sustainable? Are we living outside of our means? Are we living from paycheck to paycheck, right? Are we living on inflated income, meaning that we're using credit cards in order to sustain our wants and our needs and discern what's really truly important for us? Allowing that piece of plastic to make those decisions isn't very good financial decision making, right? Are you living on inflated income? Again, credit cards, remove those things from your wallet. I'm not saying close them out. I'm saying prevent yourself from having the access to use them. Cut the plastic, right? Because if it's a true want or a true need, you'll be able to discern the two without the plastic in your hand. How long will it take you to order another piece of plastic if you figure out, yeah, that was a one, I should have held off on that, right? Order that plastic now. It's 14 days. I promise you that one will be gone by then. Make better decisions. That's all we're asking you to do. Make a decision to get back in control today. Predatory lending, the faces have changed. Don't become a victim. We want to educate you so that you can educate forward movement. Kelly, Merck, is there anything you want to add to our presentation that our viewers, our members may be missing? Anything at all that you'd like to add?
Yeah, I think I'd just like to say that desperate times don't call for desperate measures. If you're in a situation that you just can't seem to figure out how to get out of. Don't call the predatory lenders first. Call your credit union, call your local bank, call somebody that you trust and see what they can do to help you out. Don't fall victim to the predatory lenders.
Thank you, Kelly. Kelly, Walter, front service member, you've seen this for years and years. Please share with us what you'd like to add to the context of this session so that we can make our members and our viewers a lot more aware of potentially becoming prey for these predators, please.
I think my advice, would be that, a lot of the times we don't get into the situations that we're in overnight. We're not going to get out of them overnight. But I think when we are desperate, oftentimes we just are so impatient. And if any of you guys watched our credit score one, we talked about the credit weight of your score each year. So 40% of your credit score is made up of the most recent 12 months of activity. So I think if you give yourself permission to kind of reset and take a whole year or 6 months maybe, and give yourself, a little more time and be a little more patient and set some standards and non-negotiables in your own finances, you will be better for it, and it will help you get out of that cycle. It's not going to be fast. It's not going to be overnight. And I find it very much like other habits that we have. Like I think of food as a big one because I'm a foodie and I love it. The resistance factor, like, oh, but I really want to have that thing, or I feel like I deserve that thing. I know a lot of us right now, I'm talking to a lot of friends who are like, I'm working from home and being a full-time mom and being a homeschooling teacher, and I deserve this, that, and the other. And so I think sometimes we lose perspective when we get in those desperate situations, like you can hear my child right now crying because she needs me. So, it's just, my plea to you would be, give yourself time and patience, and it's okay if it takes a little bit longer, because it really will be better in the long run.
Beautiful, beautiful way to close out. It's been a wonderful time spending with our viewers and our members and bringing this information. Kelly, i.e. both this is probably one of the most passionate topics for the demographic that I specifically serve in my role, that I've committed to for our organization.
Good afternoon, everybody. Before we go, I wanted to stop and just share a quick interview that I had with Tony Neff. He's one of the experts here at Envision Credit Union, and he added a little bit more information about this topic of predatory lending. I think you're going to find it very, very beneficial, and it has phenomenal points that follow along with Herschel's teaching today. So hang around for just a few more minutes, listen to the interview. I think you'll be glad you did. Okay, well, little shift of gears, everybody. We're doing a special insert into the topic for predatory lending, and I've got Tony Neff with us. He is an expert in this area. Tony, say hello to everybody. Give them a little introduction on who are you, what do you do for the credit union?
Hello, everybody. My name is Tony Neff. I've been with the credit union for 14 years. Held many roles, started as a branch manager in our Crawfordville office, then moved to our Appleyard office. Had the wonderful opportunity to start up what we call our Member Solutions Department. And then most recently in 2018, started up what we now have as our Recovery Department. So working with members that have fallen upon hard times, as I say every day, bad things happen to good people, and really trying to help them work out of some financial situations that they found themselves caught up in. And it happens to everybody.
Yeah, exactly. So Tony, when we were originally talking about this topic, I realized how much expertise that you have in the area. What would you like to add beyond what Herschel has already educated all of us on? What would you like to add to the discussion for our members to know for this
First
session?
and foremost, let me say I think you guys did a great job, and there were some wonderful points in there. Predatory lending is something that is out there, and it's rampant. And to Herschel's point and what you all were talking about, It can affect everybody, particularly in these times that are uncertain and unknown. None of us have ever lived through a pandemic. So we've got unemployment on the rise. We've got people that have been furloughed, and they're desperate to try to keep their families and their lives afloat. And so I think it's wonderful that us as a credit union, like we always do, are trying to reach back out to our community and our members, and let them know that they do have options and they do have choices. And going to a payday lender isn't going to be first, second, third, fourth, fifth best choice for them. So I wanted to kind of expand a little bit on what you guys had already talked about. And two main topics and points that I really want to discuss today are, what are some alternatives to payday lenders? It's spent a lot of time talking about kind of who they are, what they are, the extremely high interest rates, all of which is true. But what are the other options? Because most of these people have been to a bank. They've gone somewhere. They've tried to take out larger loans and they've been turned down and denied, and they feel like this is the only place left for them to go, and it's not. So I wanted to talk about that. And then secondly, just to talk about the life cycle and how once you get into a payday loan, it is extremely difficult to get out. So we'll talk about how that cycle starts, what that cycle looks like, and then try to give you guys some stats on why it's important to stay out of them, because it is so hard to get out.
Okay. All right. Which one do you want to tackle first?
Let's talk about some of the alternatives to payday loans. So when we talk about payday loans, you may also hear the term payday loan alternative. Use that or be cautious, because people will often refer to title loans as payday loan alternatives, which means that you're using the collateral for your car, which in a payday loan or title type of loan scenario is not good. So when we flip that to an alternative, you can use the title to your vehicle if you bring it to a traditional financial institution. You bring it to your credit union, like Envision Credit Union, or again, if you live out of state somewhere, you bring it to a smaller local community bank. If you own your vehicle outright, yes, you can use your vehicle as collateral, but use it in a way that is smart for you, where you're not going to get charged 100, 200, 300% interest and have to pay it back in a short term, and the fees be astronomical. Average $1,000 car loan and a title loan from a predatory lender is going to cost you approximately $2,000 simply in fees, as opposed to actually taking out a legitimate loan from a financial institution and getting charged a nominal amount of interest. So that's first and foremost. One of the other things I really want to talk about was Envision's strong ties to the community, and what we've created is our mission loan products. We've got a series of them. There's a number of them, really for any need that a member has. One of them that we try to help people with particularly is our payday loan alternative, which we call extra credit loan. So it's small loans, as small as $500. Typically we can go up to $2,500. We come up with a payment that works for the member, and you're not going to get charged processing fees and new title fees and reborrowing fees, right? So you're going to know all the information up front, and we're going to try to help you get out of that cycle if you found yourself in there. Another one which is really overlooked, and I say this with caution and an asterisk, if you will, but a credit card can be a decent way for people to be able to help themselves in difficult times, right? It's a revolving line. Like the loans with a credit union or a bank, a credit card is going to show you credit report. So when used properly, it's going to be able to help you in a situation to get that tank of gas, right? To buy those groceries for your family, and allow you to pay it back at still what's probably going to be a higher interest rate than your credit union is going to charge you. But even at 20 or 25%, it's substantially better than 400% with a payday loan. So those are just really some of the things that I wanted to talk about, and let you know, and bring back to Herschel's point that these payday loans, they're not helping you. It's only going to put you in a worse financial situation. It's not helping your credit. They don't report to your credit. Your credit union is going to look out for your best interest, and we really want you guys to come in and talk to us. We really do.
Yeah. So let's move into that payday cycle that you were talking about, if you're ready to move on to that.
Yes, I am
Okay.
indeed.
Okay. I'm going to go ahead and do a screen share so everyone can see what you're going to be talking about.
Perfect.
So everyone should be able to see this here on the screen, and I'll let me make it a little bit, zoom out just a tad so we can all see the whole thing. Okay. All right. Tony, explain this to us.
All right. So lots of times it really is a very simple concept, but I don't know that people quite understand the intricacies of a payday loan. And so this is just kind of a very quick general representation. Someone goes into a payday lender, they apply for the loan, they get a loan, right? So they accept a $500 payday loan. What does that mean? That $500 has to be paid back, typically within a pay cycle, most commonly 2 weeks, right? So you borrow $500, you've got to pay the $500 back plus processing fees. There's usually money owed per $100 that you borrow plus interest, right? So that amount has to be paid back, the $500 that you borrowed plus all of those fees within 2 weeks. The person got this loan to begin with because they didn't have $500, right? And now they've used a post-dated check to cover them on their next payday. Well, their next payday comes up, they still have all of their other expenses, right? They don't have an additional $500, now $550, $600, $650 to pay this loan back, right? So then they've got to go through and they've got to take out another payday loan because they couldn't pay it in full. So now they take out a second one, and then 2 weeks later, they don't have the money, so they have to take out a third one, and a fourth one, and a fifth one, and the cycle continues. And the amount that they're owing is not ever going down, it's simply going up, right? So the stats that I put down there, 80% of people that borrow one payday loan are going to have another one within 14 days. And then the second stat says 25% of people are going to have a minimum of 9 payday loans in this cycle. And then really by that time, they're so far in that it's about impossible to get out. And those stats come from CFPB, so it's a reliable source. So just wanted to kind of give a visual of how this happens, why it's so important to stay out of it, because once you get in, it is extremely difficult to get out. So why it may seem like a quick and easy solution to fix a problem, the long-term effects and impacts can be damaging.
Yeah, definitely. And so I think they're now learning some of what we've learned from Herschel in the introduction to payday loans. We kind of understand by looking at your cycle here how interchangeable the word payday lending and predatory lending kind of are, in the sense that it sounds like these lenders know that that's the situation of most of these consumers, right, who are walking through the door, and they
100%.
want people like that to walk through their doors.
100%.
Transactions.
Right. They don't want someone who only needs to come in and get one $500 loan and has the ability to pay it back in 2 weeks.
Right.
They're not making any money that way, right? Their business is profit driven. Is it legal? Sure. But we don't want our members and our community members falling into that trap when they know they have other options, right?
Sure.
We can't help if we don't know. But if people come to us, I can guarantee you Envision's going to look out for their best interest, and we're going to do what we can to try to help them in the best way possible.
We've been talking a little bit over the last couple of weeks about understanding what makes a credit score, addressing the honest fact that we have members that are finding themselves in a fork in the road kind of scenario where they have to choose. Some of them their hours have been significantly cut, right? Or they've lost their job already due to COVID-19. And so we know that there are impacts on the credit score when you have to choose to default on loans and things like that. And we understand those scenarios. In this case, can you tell me from your experience, can borrowing from a predatory lender or a payday lender or a subprime lender, can borrowing from them impact your score negatively? Like, are there certain codes or whatever that show credit report. Can you explain what you know about that?
Yeah. So good question. And you mentioned a couple different parts, right? So terminology is what becomes key here. You can talk about predatory lending, right? To me, predatory lending is going to include any institution that is trying to generate as much income as possible from a loan. It can be payday loans, and it can be payday loan alternatives, and it can also be subprime lending. Okay, payday loans and subprime lending are two completely different things. Payday loans are not going to report typically to a credit reporting agency. If you go to, any of the small payday lenders that are on, the corners of the streets and downtowns with the bright neon lights that Herschel was talking about, they're not reporting to a credit reporting agency, right? They're all self-funded. They do it through fees and kind of get associated to an interest rate equivalent. But you're just borrowing money with that individual, that private entity. Okay. So there is no credit impact, right? It's not going to improve your score. It's not going to worsen your score. It's most certainly going to hurt your financial situation and your ability to repay other debts, right? That will impact your score. But it's not going to report to credit. A subprime lender is what we call through like the secondary market, right? So lots of times in an auto loan situation, you go to a dealership and you don't know who the financee is going to be. That could go to a subprime lender. And you mentioned codes, and that is absolutely how your credit report knows whether it is a subprime lender versus a traditional bank or credit union. So it goes down there typically as what's called an FC. So there's a code on the credit report, and we'll show a FC code. And certain subprime lenders are given that code, which means that they are lending to people with a higher risk rating. All right, so go back to Herschel's example of risk and rate. And those FC codes, credit report picks up on, knows that this is a more riskier borrower, and therefore has an impact on your credit score.
Interesting. So just having the loan has a different impact than a traditional loan.
Yes.
Interesting.
Will impact your score differently than if you had it with a conventional financial institution.
Okay, so that's a lot. That's a lot of stuff, a lot of good insight. Is there anything else you want to add? Anything else that you want to mention, or?
No, I mean, again, just go back to, we're an Envision Credit Union. We are here for our members. I can't say it enough. Although as many times as I say it, I don't feel like enough people hear it. So I'll scream it from the rooftops as often as people will allow me to do so. Again, we want to be here to help you, right? We consider ourselves experts in what we do, but yet understand everyone's financial situation is different. It's unique. And we're going to work our best to try to help you out with that. It's not always easy, right? And we can't always do it for you. We can come up with suggestions. We can work together. We can sit down. We can put pencil to paper, come up with a plan, try to help you with budget, right? But lots of times the hard life decisions and those choices ultimately need to be made by our membership base. We will be here to help you every step of the way if you let us.
Right, absolutely. So for those of you who are watching this portion of the session, if you do feel like you are ready to get out of that cycle that you're in, we want you to email this team directly. We don't want you sitting on hold on a call center or chatting with us online. We want you to go straight to the experts. We want you to email us directly at community@envisioncu.com. And that's going to go straight to our team, and we'll have a certified financial expert paired with you so that you can walk this journey one-on-one. And then, Tony is always, he's one of those people, but he'll work together with Herschel and the rest of our team to come up with a solution that works for you. And Tony, thank you for your time. I appreciate your expertise. Thank you for caring enough to want to get on here.
Yeah, thanks for letting me get on my soapbox for a couple minutes.
Yeah, no, it's great. It's refreshing and it's hopeful. You know, it brings a lot of hope. So thank you very much for your time. We really appreciate it.
Thank you, Kelly. Appreciate you.